And the biggest question this week is exactly what is the Fed going to do? Are we going to actually get our first rate cut of the year? Are we going to have to patiently wait for later? What's going on, y'all? My name is Kevin Weedmark, aka The Mortgage Mouth, bringing to you the week ahead, where I deliver to you the top 3 things that I think have the potential to move the market this week. So let's just dive right in. And number 1, like I said, it's the Fed. What is the Fed going to do? And right now, if I bring this up, there's a 99.9% chance the Fed isn't going to do a damn thing. But we knew that, right? We knew that the Fed wasn't going to be doing anything. We knew that it was going to be later in the year. But the big thing that everyone's going to be listening to is, what's the Fed statement after? What does Powell have to say? Does uncertainty still reign supreme? Or since we've now seen inflation pulling back a little bit, we had that quote unquote stronger non-farm payroll number a couple Fridays ago. What does he have to say? I think the big thing that really got added to the mix was obviously what's going on abroad. The war, or the conflict, let's call it, between Israel and Iran is not looking like it's going to be coming to an end anytime soon, which is extremely unfortunate. So it's going to be interesting to see what he has to say, because everyone, once again, is really concerned about what is in that statement so they can predict future cuts. And you've heard it here first. I said it back in January. First cut is coming in September. And right now we're sitting at about a 57% chance that we're going to get that. And I think that's going to look even better and better as inflation continues to pull back. And I think right now why it's only at 57% is because the market is appearing stronger than it is. So that's number 1. So the second thing brings me right into it. What a segue. Nice job, Kevin. Is retail sales. The consumer accounts for 2/3 of GDP. That's a lot. We saw last week the consumers getting a little bit more confident. They're not as concerned as they were about tariffs that were going to bring and crash the economy, as we were told by the media. Seems that inflation's kind of been pulling back. Consumers are feeling better, but we also have the tariff effect, right? We saw maybe some potentially front loading of those numbers months ago. And that's why we saw a significant spike in retail sales. Expectation is for a minus 0.6%. I think that's a little bit in the favor of the expectation is that we're possibly going to beat that number. I don't think that traders are going to dive in too much unless we see something really drastic. I think that number is going to beat forecast slightly. I think it's going to be a little misleading. And I think that's why that you may really want to consider talking to your mortgage professional. If you don't have one, or somebody that's more strategic, right here, I raise my hand, give me a call. Love to help you out and understand how that could potentially affect that interest rate, especially if you need to lock because you have an upcoming purchase coming. And then the last thing that I think really has a potential to move the market is manufacturing. This administration has talked about manufacturing since day one. It was part of their campaign and growing the U.S. economy from the inside out. If we become more reliant on ourselves here domestically, and we're not importing all these goods that we need, that's going to be great. I don't think this manufacturing number is going to be anything that's going to be like, oh, the economy is booming. I think it's going to be a number that suggests that the economy is still sluggish. But what I'm more concerned about is it getting a little bit better and better? Are we starting to see that trend? Because that is going to be a fire once it's ignited. And that's why I'm saying in about a year from now, the housing market, the real estate market is going to be on fire, because that underbelly is going to grow, and it's going to be a flame that you cannot put out. We're going to have a healthy economy. We're going to be doing things more domestically. You're going to see higher wages. You're going to see inflation coming down because the federal government will be trimming that federal deficit. And I think overall, that's when things are really going to make the turn. So those are the big 3 things I would be really concerned about this week. We do have a 20-year auction today. It looks like it moved the market a little bit. And I think that's simply because it came in light and there's really nothing else to worry about. So if there's no appetite for U.S. debt, that could be concerning as well. We talked about that last week. But I think the other treasuries, the 10, the 30 did well. So I think it's going to balance itself out once we get a little bit more data and something else that can move the market. Do you need anything? Please do not hesitate to give me a shout. We'd love to hear from you, help you in any way I can, flyer, run some numbers. If you're a buyer or a seller and you're looking to work with a professional that's been around a long time, looks at it more from a strategic standpoint and several different ways to approach it, and is more concerned about your wallet than his own, then I'm the guy that you need to reach out to. All right, y'all, have a great week. Please do not hesitate. As always, once again, I can lend in all 50 states, but please don't hesitate to hit subscribe to the channel. I come out every day with a daily dose of fast 2 minutes of what happened in the marketplace to help you understand what moved today and what moved interest rates. And then, of course, every Friday, I come out with the Friday wrap up as well. All right, y'all, have a great week. Cheers.